What up, everyone? This is a highly requested recap video. Today was, I would say, pretty good action. I mean, I wasn't here for the morning sell-off. It worked perfectly according to the plan, and I want to go over how to trade this, what to think about, and what we could use to learn from this to take better trades in the future. I will go over the pre-market plan. Now, I will say that I wasn't here for the first, what I thought was going to be hour. I was at the DMV, and you all know how that goes. I was there for 2.5 hours when I thought I was going to be back to my office pretty fast. But I did miss the morning sell-off. It's very difficult for me to say if I would have made a trade or not. It's easy to say in hindsight, say, oh yeah, I could have took puts according to the plan perfectly. But without watching price and volume develop in real time, it's very difficult to confirm if I would have saw something that I liked without getting my bias in the way or my emotions. So this morning sell-off, it worked out perfectly. This was the plan. We were selling off into a very key area of demand, 4645, and then that daily 3 hour and 2 hour zone at 4612 and like 4600 bucks. So I said I'm open to playing puts inside of demand, targeting the demand lower. This is only true if we hang out in demand or we do not find buyers immediately. So for me, this is just a personal preference. I really like trading higher quality of setups. And, right now in this market, it's not something that we see too often. So I really wouldn't classify it with the current context as a higher quality of a setup. Obviously, a high quality setup is long in demand and short inside of supply, but we never always will get that, and the market doesn't move perfectly. It's dynamic, it's constantly evolving, constantly changing. So if the market was perfect, we would never take a losing trade. So I don't really find this morning sell off to be a higher quality setup, even though it was in the morning pre market plan. We just sold aggressively off pretty fast. I mean, there definitely was entries to get short. It really depends on how you trade. So this is not something that's universal. Every trader is going to be different. Everyone trades differently, has a different style, different entry signals. So that's why, like, I'll never correct somebody on a bad trade. If it's off emotions, yeah, it was a bad trade. But something that didn't work out, I really can't. I can't really say anything about because everybody trades differently and has a different style and edge. So, I mean, maybe you could have short after this consolidation when we broke below demand and then tried to bounce and it failed. Shorting failed rallies on moves like this work out pretty well. But, some people could have got short here. It just, there's many different ways to enter and you could have targeting the next demand zone. But if you were watching price, this was consistently making lower lows and lower highs. So you had absolutely no reason to get long anywhere at this area coming into demand. Absolutely no reason. In fact, this should have been focused only on playing to the short side. If we failed rally, if we broke below support, if we started selling off, however you trade and fits your style. So this was the context that sellers were in control, and we had absolutely no business being long in this area yet. Now, add on what we've been normally seeing, especially from last week, and this applies to NQ as well. If we pull up NQ's chart, this thing has just been selling off aggressively since last Monday or last Tuesday. Every day aggressively selling off, invalidating a ton of demand zones and actually breaking below key demand. So obviously buyers really weren't factored into the market. They didn't step in. So when the market is aggressively selling off like this applies. Everything I'm going over in this video, it's mainly going to be on ES and NQ. I'm going to get into some equities briefly after this. But this applies whether you trade equities, any other market. It's how the auction facilitates trade. So, yeah, we sold off. Haven't really found any buyers the past 2 weeks. So it's very hard to get long on an extended move to the downside without bouncing, without creating demand, and especially invalidating a bunch of key demand zones. So with that context, it is very, very hard to be this is what I call a first buyer in the market, meaning getting in when price first starts to try to move up. Would I rather let it do? Because in the first hour and 15 minutes, we aggressively sold off, haven't found one buyer, meaning price really didn't try to move up. And if it did try to move up, aka a green candle, or just price physically moving up, it failed immediately. So that number one could have been a short signal, and that number two, with that context, could have helped you stay away from the short side. There's absolutely no reason to be long, especially after an extended move trying to catch a falling knife. I use this analogy all the time, but the new people that are watching this recap, it's like watching the train coming right at you. You're standing on the tracks, right? Train's coming right at you. Get off the tracks. When the train passes, you could get right back on the tracks and go along with your business. Same thing with the market. It's aggressively selling off. The knife is falling. The train's coming at you. There is no reason to be long on the first test. Now, yes, we did rally, 30, 40 points from the lows, but we came to the bottom of the demand zone. This zone now is technically invalid, and I most likely am going to invalidate these demand zones. We'll see tomorrow. But then we rallied, right? So now we have somewhat of buyers showing that they're stepping into the market. Obviously, some more buying pressure. Obviously, price rallying about 40 points. So now we found somewhat of a bid in the market. This is what I qualify as a higher quality of setup. And I will say, every time I see this, I would probably say it has a 75-80% chance of working out, which is why I consider it a high quality setup. And when I do see this, I'm very confident it's going to work out. It's also in the course videos. I forgot what video it's on. Let me see if I can pull it up. But I talk about how important it is that if the market does put in, it creates demand on the way down or creates supply on the way up. If we do rally back into that area and we put in a lower high at supply or a higher low at demand, that is a very bullish bearish sign. I think it's in one of these videos. New buying versus new selling, I believe it's in. Where I talk about a very bullish sign when the market puts in this case, a higher low at demand. So we aggressively sold off, the knife was falling, and we created demand on a 30-minute time frame with that 40-point rally that I said. So here's that 40-point rally. Here's that basing candle. I'm going to switch drawing sets. And then the market pulled back into this area. So if you got long on this rally, which I don't recommend, I find that to be a lower quality of setup, still would have worked out. Your stop loss probably should have been lower day. But let's just say we did not get long on this rally. We pulled back into this demand. This could have served as an area to get long. Now, I'm just talking after reviewing the chart. I didn't see this because I wasn't at my office. I got to my office right here at this oval. So at the point I got back to my office, this is what the market looked like. This could have been a good area to get long if you saw this bounce off demand. Maybe after we wedged. Maybe after volume right here started to build. As you can see right here, higher volume in this area. You probably could have got long that candle. Stop below these lows. So it really depends. But I got back to my office around this time. I forgot what time this is at. Like 1:15-ish. And an intraday commentary tab. So I will say, I didn't know that this was going to happen. I didn't know this was going to work out. I just love to see a higher low at demand when it forms intraday after a very extended, aggressive, violent sell-off. So I didn't have this planned out. Did I know it was going to happen? No. But I just got back to my office. Took way longer than expected. ES SPY bouncing off of the 4588 demand, which was printed intraday. See how we were putting a higher low off of it? Then we had that resistance high, and it obviously showed as an important area of resistance. So I said if we could build some volume, find acceptance above 4612, I don't see why we couldn't test the open price of today. Where I got the open price was if we did get above VWAP, which is where I got the 4610, 4612, we could just call it, area of resistance. There was no resistance between that to the open price, which is a good reference area. So that's really the nearest, most realistic target I could have came about. So then we came up. I want to just draw the resistance line. You could have drew it right here at 4609. I put mine a little higher, around 4612, just because I wanted to see price come about, 3 or 4 points above VWAP and above that resistance, indicating somewhat of acceptance. If we could base out or create demand above a very important area, whether it be supply or resistance. When we create demand inside of supply or above resistance or above a key inflection point and we find value, buyers create demand, or there's strong volume above it, that's really saying buyers are strong and we have no reason or no business to be short, and we should be really leaning more towards the bull side in this case. So when I saw that, 3 candles to the downside, I believe this formed a 15-minute demand. There may be like a 10-minute, weird time frame, but just seeing that rally, that base, and then another rally. As soon as we started moving up around 142, I got long the SPY 462 calls. Obviously not the largest size because I just got back to my office. I didn't see the morning action, and I really wasn't in the right mentality with, being fine-tuned or in tune with the market. Wasn't really connected with it. So I got long the 462 calls. I got these at 55 cents or 56 cents. And right away, this thing started working out. Volume started coming in. And as soon as we hit my target, the next candle, when we tried the 5-minute somewhat RBR above it and started moving back down, I exited for about $1.65 on these contracts. So very good gain. It was $1.10 in a 50-minute period, 45-minute period, a little under 200%. I wish I traded larger size that I normally do with SPY and QQQ, but just like I said. And another thing too is you could have got long when we broke above that 4612 area, 4610 area. I'm not opposed to it. However, if I was, there's really, where would I put my stop loss? In this case, it would really probably have to be below this area, and it's kind of too far, and I really didn't get development, meaning I don't know how price is going to respond above that resistance. The last thing I would want it to do is break above it. This goes for any resistance or any support or supply. The last thing I would want it to do is break above it and then immediately come back down, not finding acceptance. So I love to see consolidation, higher volume. That's what I mean by buyers accepting price inside a supply or above a resistance level in this case, because when we get this consolidation and then when we get that quick push up, you could see it probably a little better on a 1 minute. Came back down, retested that VWAP, retested the 409 or 4609, and then we started moving back up. And then this is where I got long immediately. And then now my stop is below this low instead of putting it all the way down here because we had this consolidation. And another thing is, I got a lot of questions saying, how did I know this was going to work out? Or, why did I take this trade? And this goes for every single trade I take. It does not matter what I'm taking. I have no clue if a trade's going to work out or not. I just put risk on the table. I saw something online the other day saying about if you have no risk on, that's the greatest risk. Meaning if you don't put risk on the table, you're never going to make money, you're never going to execute, and you're never going to have a trade on. So I never know if my trades are going to work out. I just know when I see my confirmations and my entry signals and something that looks good to me, because my eyes are trained for over 6 years of experience, that I know that if I get my confirmation signal, all I have to do is know where I'm going to be wrong or know where I'm going to stop out if my analysis is wrong. That's my risk. And if it doesn't work out, I brush it off because I know I'm going to have a trade probably tomorrow, or I could have a trade in 5 minutes after I stop out. The market's always going to be here. I always think about if I lose on this trade, my next trade could be one of my best trades I've ever taken. So it's a big emotional and psychological barrier, but it comes with screen time and it comes with experience. So that's pretty much it on that. And it's the same analysis with NQ. We put in a 30-minute DBR, pulled back right at it, came back up, and had a strong rally after invalidating a ton of demand zones earlier in the day. And I put this in there. So this is why I always say to use market confirmation when there's volatility. In my opinion, the past 2-ish months maybe, with all the volatility and all of these strange, unpredictable, and news catalyst type of movements in the indices, ES and NQ, in my opinion, it's better and easier to trade them. I find it to be easier. It's where I make the most amount of money compared to other things, just because it's easier to read the context and it's the market themselves. For example, this chart on PayPal, this was in the pre-market plan as well. I wanted to find buyers at these demand zones, but because of how weak the market was, I'm going to pull up NQ here. These charts look identical. So because how weak NQ was, I'm not interested in trading PayPal because I know these equities make up the market. So if the equities are selling off and the market's selling off, the charts are identical. I mean, we could pull up a compare with study. So this is actually a pretty cool thing to do. So if you go to add studies, you go to compare with, you can compare the equity, and now in the background, this purple line, which I'm gonna make white, is now the NASDAQ chart, and I can make it a candlestick if I want. So it's identical. Look at NASDAQ and look at PayPal. So if I'm looking to trade PayPal, I would want NASDAQ to be strong. And this goes for any other equity as well. I could pull up Apple, which had a relatively stronger, no, that was not. Look, Apple's chart is identical to NASDAQ, except in the first 20 minutes when we rallied and NQ was selling off or just sideways. This chart is identical. I could pull up, now I didn't even plan this out. I'm just going all on the fly here, but look at these charts. Completely identical to the market. So if I'm looking to trade an equity, right? I'm going to remove this now. If I'm looking to trade an equity, I really need to see the market either A, be strong, or the market come in demand and bounce while that equity is coming into demand. In this case, Amazon came into this demand zone while NQ and ES put in a bottom, came back, retested. Maybe you could have got long in this area on Amazon, or maybe you did get long when we started bouncing on NQ here at demand. When you saw NQ rallying, maybe you took Amazon long right here, stop below the low. So that's just how I trade. It's just how I prefer to do it. Like I said earlier in this video, everybody trades differently. Everybody's got a different style. I know what works out for me the best and the most. So that's the only thing I could really explain and show you guys is what works out for me, how I trade. Not everybody's going to be the same. Not everybody is going to be able to fit how I trade either. So that's pretty much it on equities. That's why I prefer trading SPY and QQQ. It's just a preference. Always look at the market confirmation. Okay, let's go through some questions. I know you guys posted a bunch. I'll just briefly go over this. How to know if volume is drying up or if it's a pullback before another leg up, basing versus reversal. So I kind of explained that with ES. Let me pull this up here. So you know how we broke above resistance? Or act like this was supply, right? Let's remove this. Let's remove this. Remove this. And let's just act like this is supply. Right in this area right here. So we come inside of supply and the market doesn't immediately sell off. What I have personally noticed is the best trades that I take are ones that come into a supply or demand zone and bounces or rejects immediately. We don't move farther into the zone. We don't hang out inside of it. We hit the start of it. Let's just act like this is a real zone. We hit the start of it and we start moving back down. That was good for a couple points, right? If we hang out, we consolidate inside of supply or inside of demand, I am most likely going to void that imbalance and not trade with whatever direction it was moving in. So in this case, we start consolidating, basing out inside of supply. That's a bullish signal. I don't really see price pulling back. And if it does pull back, who cares? You don't have to take it. That's another good point too, is this morning sell-off from demand. You see how we're hanging out inside? We're really not doing much. That's why I wouldn't have taken this, move long anywhere in this area. There's no business to be long. Another thing, everybody has the need or they feel like they have to trade every single move. I said this in one of my past videos. It's more impressive if you take, let's just say, 2 or 3 high quality trades a week versus taking 2 or 3 low quality, really garbage, shitty trades per day when the market is moving. Just because the market's moving does not mean you have to trade it. Don't feel the need to trade every single move. Trade when your setups trigger and when your edge is present. If you don't have an edge, you have a lot of testing to do and you have to figure out what works for you the best. Reverse engineer it, reverse psychology. Go through your journal, That is how you develop your edge. No shortcut. There's no right answer either. So don't trade everything that's moving. But that's how I would, pick the difference between a pullback or a basing. Basically, I hope that answered that. Go through a few more here. How to let winners run. Use my take profit strategy. I put that in the course. How do I know it's going to be a V-shaped recovery for the day? You really won't know until it happens. Like I said, I didn't know that this was going to rally to the extreme it did. I took profits at the opening price. If I held, I could have, got a 250, 300% return on these contracts if I held to end the day. But no one knows what's going to happen. You just use your clues and put risk on the table. There's really no way, no right answer, or no right way to know something that is going to happen. Yeah, everybody needs to journal their trades. It's key. I would say the two most important things that made me profitable was journaling all my trades and reviewing them every weekend. The good, the bad, getting rid of what didn't work or what didn't feel right, and scaling up what worked for me the best. That's really how I developed my edge. And then reading psychology books. The Daily Trading Coach, Brett Steinberger, he's a GOAT. Definitely recommend his books in the books tab. Option, strike price, that is in the course. SPY went over. JP Alta, level 2 time and sales. I got one or two more videos to make. When I get some free time this week, I will definitely add them to the course, and it will be in there. It's coming soon, the level 2 time and sales. Reversal. Yeah, I think that answered that, Jester. Hope so. Let me know if it didn't. But yeah, that's pretty much it. I mean, it was a weird day. I missed the first, 4 hours that the market opened. Came back, and 20 minutes after I came back, took a pretty good trade. So, not going to complain. Probably the first hour would have thrown me off a little bit. So, I don't want anybody to think differently of the market. Just read the context, learn from the charts. What I did, honestly, this probably will help a bunch of people. I hope these lessons help. I mean, I just talk whatever comes to my head. These aren't planned or nothing like that. So let me know if these things help or not, and these little tips. But what I used to do when I first started trading was, and I kind of still do it to this day, is I would go on my phone or my iPad. I would even print out pictures, literally, of this chart. I would annotate it where I, hypothetically could have entered, where I did enter, where I would have stopped out, what I saw. And I would basically just annotate these charts, and I would save them to my phone. And whenever I'm bored or just, doing nothing, I would go on my phone or, have a binder full of charts, and I would just review them. And then, that built my confidence up. That made me come into the market less blind and feeling like I wasn't gambling as much because I've seen different things play out. So just annotate your charts, review them. There's no right or wrong way to do them. So I don't want to get a bunch of questions, how'd you do it or not. Just dissect your trading from the inside out and figure out what works for you and how you could look to improve and get better. This is a 30-minute zone. But yeah, that's pretty much it. Let me know if this helped. I mean, I don't know if it's going to help or not, but I hope it did. Appreciate any feedback. Tag me in the main chat, and I'll see you guys tomorrow.